Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Jannick Malling of Public.com coming to us from his New York apartment. How's it going there in New York?
Yeah, hey Nathan, good to be here. It's going okay right at this moment, all things considered.
Now, before starting this call, you said you'd just come back from Denmark, which has kind of got its COVID issue under control for the most part. Why would you come back to New York? Why not just stay in Denmark, which sounds like a great place to be? I'm wishing I was in New Zealand right now, right? You see the pictures of people in New Zealand. But
yeah, I know, especially considering it's 1,000,000 degrees here in New York too. I've been there for a little while, and so wanted to kind of come back, and we're then crossing our fingers that the daycare institutions and whatnot get to reopen soon. I have a 2-year-old son, so he was missing some social interaction too, I think, and yeah.
Sure, got it.
Time will tell whether it's the right decision, but there we go.
I get it. Cool. Well, thanks for joining us. So what is Public.com? Such a great domain, which maybe I'll ask you about in a minute, but what do you guys do?
So Public makes the stock market social. If you look at why people historically who haven't gotten involved in the stock market haven't been investing, fees and commissions is a part of the problem, but we've believed always a smaller one compared to just a general sort of lack of financial literacy, right? And so that really comes down to, when should I get started investing? How much do I need to begin with? How do I build a solid portfolio, diversified portfolio? What does that actually even mean? Mm-hmm. And so we just generally found that there was a lot of intimidation involved with the kind of journey of getting involved in the market. And so basically what we built with Public is two things. We built sort of 2 layers around the stock market, actually. So sort of at the core, we built a zero commission stock brokerage, mm-hmm. But that's really only 10% of what we do. The other 2 layers are fractional investing, and a social sort of education layer, right? And so the fractional investing layer we kind of launched was, I believe, the first sort of brokerage to launch the ability last year to invest real time in fractional shares, meaning that you can buy any stock for any amount of money. So you can put $1 into Amazon, for instance, which really we always saw as like the prerequisite to increase access in order to really build a social network for the stock market, right? Because and so we launched that last year, and then the kind of social layer works in a way where you can see what other people are investing in. More importantly, why, right? So whenever you go to make a trade on our platform, you can add a little caption with your investment thesis that gets posted to a feed. You can now share it into chat groups, which we launched to earlier this year. And so it provides this like social experience around the stock market, which means that the intimidation factor goes down because you can kind of collaborate and work with other people on building out your portfolio piece by piece.
Very interesting. So if I'm investing $1 in Amazon, who holds the other $3,154 as of current stock price? Are you guys
a mix of a mix of us and then other people in the community too, right? So it is a little bit of a sharing economy kind of take on ownership in the stock market, which really, if you think about it, like historically maybe has not been as big of a problem, but in the last 10, 15 years, a number of things have happened, right? I think companies have stayed private a lot longer. So I believe it was actually Shamath Palihapitiya, who I heard this from recently on another podcast, who was like 15 years ago, there was like 8,000 public companies. Today there are 4,000, right? And so what you have happened there is people obviously consolidate a lot more, which means, Facebook, look no longer than Facebook, Google, etc. Which then also means that you build up the market cap of those companies, which is why you now have $1 trillion companies, right? And so without doing any stock offerings, of course, you then push the price per share up quite high, and actually push it out of reach for a large part of the people in this country. So that's really why we sort of realized that fractional ownership was going to define the future, and like really what's required to onboard the next wave of investors into the stock market, alongside the sort of social layer, which is really, we always talk about it like this, the fractional layer provides access and makes the stock market accessible, but the social layer makes it approachable, right? And those are actually two different concepts, because you can have access to something, but still have no idea where to even begin, or whether you're doing good or you're doing bad. And so the social layer makes it approachable, because you can follow other people, everything from like domain experts in certain kind of industries to just friends and kind of thought leaders within different things. We have even a number of C-level executives of public companies on the platform too. And so you can kind of follow people and actually watch what they do, when and why. And that kind of gives you all these bite-sized snippets of information that lets you build your financial literacy sort of step by step in, while you're building out your portfolio at the same time, of course.
Yeah. Interesting. This is going to date myself, but when I got kind of started coming up in the .com boom, and that was when that first wave of like E-Trade and Ameritrade and all these zero commission brokerages, that was pretty revolutionary at the time, because before that was very expensive to trade stocks. And so these zero commission, and then at the same time you had a lot of bulletin board, stock bulletin boards popping up, Seeking Alpha and various different things like that. Raging Bull. I remember I was a contributor to Raging Bull, which I don't think exists anymore. But one of the problems with all those was people are pumping and dumping or promoting their stocks, just trying to give it a short-term pop so they can then sell. Like, how do you sort of overcome that issue?
So I mean, in a number of ways, and I'll get into the tactical bits of how we make sure that doesn't happen on our platform. But before we dive into that, it's funny, the problem you're referencing is really the way we frame that is that the culture around the stock market has always been not very diverse, not very inclusive, not very welcoming, right? And so there's been these like stereotypical people who has been the people that were the most engaged with the stock market. And I think at the core, that's really what we're out to solve with Public, right? And so I think we have a very different community on Public than maybe what you'll see with other sort of financial services providers or brokerages at least, right? So an example, 40% of the people in the community are women, which obviously is still not good enough, but I think compared to industry standards, it's pretty, it's a lot more sort of mixed bag of people. And the interesting thing is, the reason that it's important to us is, again, because we're building it like a social network, right? So having diversity of thought is actually very, very important to increase the value that the community provides, right? And that's also where, when you have diversity of thought, you start to kind of go counter against if we just build the community with the same type of person and then just like only that kind of person involved, because then it would be much more a community where everybody was just like patting each other in the back, and then you end up with some of those scenarios. But the interesting thing is, so I think the culture, and obviously people should go and experience that for themselves, but the number one thing we get more than anything from the members of our community is that they just appreciate the fact that we build a culture unlike I think any other financial community has ever really built, that is a lot more welcoming, and therefore it's something they can actually learn from. But there was a couple of things there that was like, because we obviously thought about the problem that you were referring to up front before diving in. And one of the things that's been super interesting to observe, even as a social experiment, frankly, has been, we kind of call Public actually the most verified social network, maybe in the history of social networks, because we are, have a broker dealer and have a social network, which means that all the members of our social network, we have done KYC on, right? We've identified them. They are verified customers of the broker dealer too, right? And so there is no anonymity in Public, right? And when you have a community made up of only verified people, you don't get the type of chatter that you're kind of referring to. You don't get the toxic pump and dump stuff, right? And the tone is just, and the vibe and the whole conversation just changes so dramatically. And that's been super, super interesting to kind of think about. And even kind of watching the Senate hearing, I think there was a couple of people like throwing around those ideas on Twitter. It's like, oh, what if you just had everybody kind of verified and whatnot, right? Funny thing, we've actually done that just for the vertical that is kind of finance and investing. And that's been a really big part of making sure that people sort of stay on their best behavior. On their
game. One more time, we're going to go back just a little bit to the fractional, because I think fractional ownership, so I think that's very interesting. If I want to buy, let's just keep it simple, half a share of Amazon, do I have to wait for another public participant to pick up the other half, or do you guys make, I'm almost thinking like,
so that's, I mean, it's a good question, because I think there's been other asset classes that's gone through some sort of fractionalization. And there was a couple of other fractional things in the industry before us, but those were actually not processed in real time. So you maybe had to wait till the next day to get executed and whatnot. So if you place an order within market open, obviously we execute that order, even for half a share of Amazon, even for 0.0001 share of Amazon, we execute that in real time. And then we basically take the risk on it for the remainder part, right? But at this point, that risk in our community on our books is like fairly small, because it's never more than a single share of any company, if you will, right?
Oh, got it.
So
the next time, 2 days later, someone else wants to buy some Amazon, then you can sell portions of that to them.
And frankly, like if you model it out, then the more. So when we got started with this process, we were running basically a process where every week we went from 50 to 100 to 200, and we started doubling the new number of securities, public trade companies that we were slicing up, as we called it. So we call it slices within our app. And so the more we did that, the more diversified that sort of leftover balance became, if you will, right? And so when you actually model out the risk, it's actually sort of it's a fairly it's not riskless, of course, but considering the impact of what that allows us to do, we thought that was well worth it in order to increase access to so many more people.
Very interesting. What is the backstory? What were you doing before this, or where'd the idea come from?
Yeah, so I ran a fintech company in Europe, between London and Copenhagen. We actually, there was a group of us that was part of Saxo Bank, which was like the E-Trade of Europe back in the when kind of trading went online, to your point, back when like the minimum deposit was like $10,000, and so I started my career there. A bunch of us kind of left, and we ended up building a few different kind of fintech companies together, all within the kind of same group. And so that really gave me a lot of exposure to many different things. One of the companies that I sort of incubated within the group and ran as CEO was called Tradable, which was basically an API for third-party developers to build software for financial institutions around the world for like a single point of integration. And so basically CVH Group got acquired back in 2016. So it was like an 8-year journey, which I obviously learned a ton from. And it was even, we actually started the company before fintech was even really a term, to be honest with you. It kind of came halfway through that, right? And I think on the London scene, we're definitely one of the earlier kind of fintech players, if you will. And then I kind of went to the US after that. It was funny because we actually started that company back in 07, 08. So literally, I think one of the first LPs we have was Lehman Brothers,
Oh, wow.
About 4 weeks, and then they kind of went under. So we started that during all the top of the heydays and really have to navigate that market and kind of find a way out of that and try to turn that into kind of an opportunity, which we ultimately did with some of the business lines where we did some credit facilitation. That was actually kind of our first business, credit facilitation over API between small and medium-sized businesses and the big banks in London, which after 08 was like a lot of those SMBs couldn't really get credit lines with the big banks anymore because margin had and credit had dried up, obviously. And so there was a lot of stuff there that was kind of super interesting, but ultimately, after that came also the Dodd-Frank framework, which means that, when you're operating business in Europe and the US, it's two very different things. And so very few businesses are actually transatlantic like that. And so we never really had much business in the US. And I always obviously found specifically the US stock market to be super fascinating, given that it's the only market in the world that really has grown that sort of almost 10% year on year for the last 100 years. Sort of the Champions League of the stock market, if you will, like the biggest companies in the world obviously go and IPO there, whether they're from China or Europe or wherever. So I had some ideas for that. I wanted to get involved in that. And then I kind of packed my bags and went over here and started that process.
Awesome. Cool. Did Lehman's check clear before they folded?
No. No.
But that didn't sink the ship.
It didn't. I mean, it was close. It did not. It did not. We managed to work, I think, with like some of the other banks. And the funny thing about how Canary Wharf works and whatnot is like I think 12 months later, we worked with one of the big UK banks. And then 12 months later, we were one of their biggest 5 clients globally. Okay. And so then after that, we could build out the marketplace very easily because then we had kind of proven a lot of traction around that model.
Cool. All right. Let's talk about fundraising. How much have you guys raised and over how many rounds?
We've raised 30 million in total over basically 3 rounds.
Cool. Let's go chronologically, because I was looking at the angel round and I'm seeing some names on here like Will Smith and Sophia Amoruso and JJ Watt, the American football star JJ Watt. So tell me about putting this round together and how'd you get these guys? And
that was actually in our most recent round. That was not even the angel round.
Okay.
So yeah, we actually went a little backwards, to be honest with you. So our first round was mainly I teamed up with Ian Sigalo at Greycroft, who obviously was a very renowned sort of fintech investor, given his involvement in Venmo. He had done Acorns and others, but Venmo specifically was interesting because obviously they were the only financial product to have ever really touched on sort of the social element of finance.
Right.
And so he had some learnings from being an early bagger at that company. And so that was kind of our first round, the seed round, if you will. Then the Series A was actually, again, Greycroft and Ian, but then he brought in Samir Gandhi at Accel, who was the guy he had done Venmo with 8 years prior. Okay. Right. And so there was an early theme there, which is very, very clear. And I think at that point in time, the product was still in beta. So it was not all the things we have now. Today we have like group messaging and the feed is like way more advanced and whatnot. Back then it was a little bit more just like the transaction lock of your trades and your friends' trades, right? And so it was very, very, it was reminding them a lot of that kind of Venmo feed of payments.
Yeah, sure.
And they were seeing like a similar kind of engagement with it and whatnot. And so, and then basically we did that while we were still kind of in beta. And so I think we always had like the labels for us. And I think for any regulated companies, it's always going to be a little bit off because to build a broker dealer, like it's tough, right? Like you need to raise a lot of money just for the license, just to get people involved with the license. Then on top of that, you need money to build product. You need maybe a couple of bucks to have some sort of a go-to-market strategy that can kind of make a splash or whatnot. So, and I think that's the reason why there's been such high kind of barriers to entry and why it's actually taken a while for the next wave of because from where I'm sitting, haven't been part of like the initial sort of online trading kind of era, right? Back in Europe, but it was very reflective of what was going on in the US. And so it then you kind of had mobile coming, right? And it's like, it actually took a little bit of a while, right? For the next phases to kind of really emerge, right? Because then you had kind of mobile zero commission. And then I think we kind of tried to pioneer the next wave, which was mobile fractional, right? And
mobile fractional,
kind of democratization of the stock market, we think. And then after, so then we actually launched a public for general kind of availability, launched out of beta in September of last year, I think.
Okay.
And so And after that, that was also when we launched the kind of fractional piece. We had some of the social elements, and we kind of know how things were looking then. But when we launched that, things really started to kind of take off, and then we just grew very, very fast on the back of that, and that kind of started the conversation around the next round, right? And for us, I think it was always something that we and something that we actually still think about now and think about a lot, which is, I think a lot of people, there's kind of two ways that you can kind of think about your fundraising strategy, right? There are people that try to push the valuation as fast as they can get it, and then they raise when they're about to run out of money, because then they feel that they basically pushed it as far in order to dilute as little as possible, and then go raise money. So we never really approached it like that. We kind of thought about the company in different phases, when different things are kind of proven to us, and when there are new undertakings that we want capital, new opportunities, basically, we want to go after, right?
Yeah.
So the way we kind of break it down is we have a macro thesis, right? Which is that at this day and age, there is no reason that everybody shouldn't be able to get involved with the stock market, right? In the age of mobile, fractionalized kind of assets within the public markets, and like a social education layer to make sure that people can, become more and more educated around kind of solid investing principles and things of that nature. Like, we think the TAM of that market is way bigger than it was back when you were just taking trading from the phone and kind of putting it online, right?
Yeah.
And so we really have always seen public as growing the size of the market more than anything, right? And we see that in the numbers. I think like 9 out of 10 people that we onboard are either first-time investors or have very limited investing experience. And so from our perspective, we always look, okay, there's the macro thesis of doing all that. And then we break that down into like a bunch of micro theses, right? Okay, so what are the things that then need to happen, right? Yeah. And then we look at things at actually that micro thesis kind of level, and on the back of that, we do our fundraising, right? And so, so like current runway has very little to actually do with that. It's really more a matter of like, okay, now we've proven one thesis. We sort of have the next thing here we want to get into. And then we start planning how much capital we need to go after that sort of micro thesis opportunity. And then we raise the money to go and do that. And then that's kind of how it has been evolving for us.
Interesting. And these macro these sort of theses that you're sort of, because this is a new strategy I've never really heard people talk about like this before, so I want to poke at it a little bit. Are these different theses that you're sort of thinking of a fundraising round around, like fractionals one, socials another? I mean, is it kind of product driven, or is it more new markets, or what? Or
I mean, obviously, at the end of the day, a lot of it becomes very product, right? Because products, sort of big items in the product roadmap, ends up opening up new kind of markets, or maybe new segments, not necessarily geographical markets, because for us as a broker dealer, that's more of a regulatory concern. Yeah. But if you look at segments within the market that you could kind of go after, right? Then it's more, because again, in theory, anyone above the 18 can be a public user above the age of 18. So it's a very broad set of markets. So we had to kind of think about how we break the market down and who we're really going after at which points in time, and who we're kind of building the product out for, and how the product kind of evolves. And so yeah, ultimately, obviously, product roadmap is a critical sort of compass in defining out those kind of micro theses. But like I said, there are also regulatory things for us, keeping obviously in a very highly regulated space, and even team, right? Like, I think that's the other thing. We've gone through a couple of things where we started, obviously where we kind of reorganized the team. I think we're very big on, me and Life, my sort of co-founder, we're very big on taking sort of the temperature of not just how much technical depth or kind of product depth or whatever, but also like organizational depth, right? And I think it's something that you haven't, I mean, I guess Ben Horowitz talked about it a little bit in his book, but outside of that, people don't talk a lot about it. I feel it's hugely important. And obviously, so even just like thinking about like, do you then have like resources and the capital to put the team together that you need to go after this next kind of micro thesis, right?
Yeah.
It probably actually starts there, and then obviously product is one concern and kind of regulation is one concern. So you can kind of break it up in those three verticals for a company that's in a space like ours.
I have a couple little kind of tangential questions, then I want to get back to
Sure.
fundraising for a minute. But one is, you know, for anyone, any audience listeners who are maybe in fintech, just so they can think about it, what does it cost roughly, ballpark, to get a broker-dealer license? Like, you know, because that's a big part of being in a regulated space. You've got to have the resources for that. What's the sort of, you don't have to say your exact number, but like, how do you?
Yeah, I mean, it's obviously going to depend on a number of things, right? But I would say it's probably from a couple $1 million to a few $1 million, something like that. I mean, but it's you know, all these things don't come equal. If you look actually on broker check on Finver, then there's like a number of different there's sort of a checklist with a number of different sort of properties of the license that you can have. Then there's the matter of how many states you're regulated in. So it's not just like a binary question like that. Like you're not just fully regulated or not, so to say. But I think, but yeah, that would probably be my kind of ballpark estimate.
Sure. Another tangent. I totally understand the social feed for a stock app. I never quite understood the social feed for like Venmo. Do you have any reason why I would want to post my paying my gardener on and put that on social? I never got it. It's a great service.
Yeah, it's actually funny. So you know, Mike Vaughan, shout out to Mike, who was the COO at Venmo, is at this point a good friend of mine and an advisor to the company and has been very helpful in many respects. And I think it was even the case of like when I first interacted with him around Public it's like, yeah, actually like that really adds a lot more layers, right? And so I think it initially like that Venmo thing was like very, like you would see somebody on Twitter being like, oh, kind of Venmo for, you know, stock investing and whatnot. Now I think it's growing to become much more of that. We now have kind of chat groups, right? We have sort of direct messaging in the app. The feed is now just more than trades, right? So like there's a lot of different kind of things there. And we have news articles in there on companies. So you and I both own Apple, for instance, right? And Apple launches a car tomorrow, you know, we'll probably get that piece of news in our feed. And we can both kind of comment on that. And so it also becomes a way for me to then see what like-minded investors are thinking about the news, about the companies that they own. And that really lets me not just see news around stocks in my portfolio, but it lets me sort of see how people are reacting to those news, how other verified investors that we as public have verified are actually investors in that company, because at the end of the day, I can just tap your name and I can see your portfolio, right? And so, and that brings a lot more kind of layers to it. So for the Venmo thing, I don't know, maybe tweet at Mike and then
okay. I'm probably just missing something. I mean, it's a great service. I never quite got the social, but
I do think it's fun as someone consuming the feed. I never posted very publicly to that feed either, but for someone consuming it, I think it's fun. And I think the number one interesting thing that I always found was like every social graph tells you something about people, right? And and I think if you go a couple of years back, even everybody was like, "Oh, social, it's over." You know, Facebook, they have everything. It's never going to change in the next 100 years. And you could see why they'd think that way, given their growth. I mean, it's been astonishing. But then suddenly you have the emergence of what I call kind of verticalized social networks. And Venmo was actually one of the first ones of that, where I can learn something. I can learn something from the Venmo feed that I cannot learn off of Facebook or Instagram. Namely, who's having lunch together, right? Who went golfing? Who are in a fantasy football league together? Like it's all these kind of different things. And I think that was the key when we looked at the Venmo kind of case. You know, that was the key takeaway for us. It's like, okay, what can you learn about people on public that you'll never be able to learn elsewhere, right? And one of the big things that I believe has been a big factor to sort of to public has been, you know, people kind of vote with their dollars a little bit, like they invest in the companies that they believe in for the future. And so that gives you data points about people that are actually very fundamental and core to even like their beliefs as human beings that you cannot get on any other kind of social network, right? And that's been the super interesting thing about building a social network where people have linked their assets that they actually hold, along with the thesis and the reason of why they're holding those companies.
Interesting. One more quickie, then back to fundraising, and then I'll let you go back to work. But the domain public is amazing. I'm assuming you purchased it. What was it being used for before? Is there any story there?
I don't think it was being used for anything. The story is it was owned by someone we luckily live. I have to get all credit to him on this one. He is I think I never really found out from him, but I have a feeling he has a very decent internet real estate portfolio, if you will. And so he was basically, let's just say, very good with kind of domain names and knew a little bit about that market. And I mean, that is an interesting market, right? Because it's a little bit like, it's not super transparent. It actually, in a strange way, reminds me a little bit about the art market in a way, right? Like you never really, it all goes through brokers. You never really know kind of who's buying what and whatnot.
Sure.
So that was like a tough deal to kind of pull off, especially at that point in time. But I do think that, to be honest, I think it's been a super worthwhile acquisition, which and that's really how you have to see it. It's an asset purchase, right? It's not like a cost that month, you know. And so, but I think it's important for a number of reasons, right? We always wanted. So if you go to public.com/Jannick right now, you can see my portfolio, right? Even on the web. And so we started to see people already putting public.com/username in their Twitter bios and this, that, and the other before we had Hello Public, right? And so that's just a very long thing. And so we also thought about it, and it's like, hey, if we can have a shorter domain name, it's like a good domain name, then more people are going to put that into their profiles on other social networks, right? You can people on AngelList be like, hey, this is my private portfolio, this is where I do my public investing, right? And then the name obviously just lends itself very well to the public markets, obviously, right? And then and also touches a little bit on the whole social kind of thesis of us wanting to make more information kind of public within the public markets, right? To basically democratize the sort of the reasons why people make the moves that they make within the stock market.
Do you buy a trophy domain like that after Series A or after Series B? Like when do you buy a nice trophy domain? And you don't have to share how much you paid, but if you want to, that's fine too.
We bought it, I believe. We started negotiating for it before Series A.
Okay.
And then, actually after, but again, our Series A was kind of early because of the whole broker dealer thing, right? So our Series A, we were still in beta. So like our Series B, if you will, which is maybe more real, our more real Series A, we started negotiating for it. And then our investors actually also came to us. So that round with Will and JJ and Sophia, like those names you mentioned there, they were actually the only new investors. The rest was internal investors, all of it. But we wanted to bring in some people who really believed in our mission, what it stood for, and wanted to be part of building financial literacy for the next generation of investors. And so those were kind of the only people that we had invest other than existing investors. And so knowing that, we kind of then I think we pulled the trigger once we knew that, okay, like this round is kind of coming together.
And this is obviously not the top. This could be a separate podcast about buying trophy domains, but like I think it's always interesting if you're the seller of a domain sees that a company just raised a lot of money. Does the price now shoot up, right? Like how do you sort of stable? I don't know.
Well, I think that's why a lot of the industry runs through brokers, right? Who help broker the deals. So it's not
So let's
look to the art world actually.
Let's get back to the most recent round. So, how and why did you bring in JJ Watt and Sophia and these guys? Interesting.
Well, I mean, like I said, I think we had some conversations with them, and they were very. Again, it comes back to us wanting to change the culture around the stock market, right? Sure. And so we kind of thought about, okay, and there's a lot of different definitions of kind of culture in companies and communities, but ultimately, culture is made up by people, right? It's made up of people and their actions. And so therefore, we kind of thought about who would be people who obviously are fit with our mission, who believe in what we're doing, who wants to help push this forward, and who then obviously have a profile and a platform where they can help kind of amplify that message. And then that's how we got involved with those three. And there was actually a handful of others, Casey Neistat, and Shari Redstone from Advancit Capital, who was the Viacom CBS. So it was just a good group of people to really help us kind of put a bigger message out around wanting to change the culture of the stock market and have it be something that is truly for everyone, and not just something who's for people who are already super literate and just wants to jump in and also maybe day trade a lot. But like, we don't really allow day trading on the platform. That's not really like most, like 74% I think of our community are long-term investors, right? And so it's really this mix of people investing for the long term, but then staying engaged around their portfolio by way of like the social sort of education layer.
How do you, two-part question and almost done, but how do you identify, like, I like that thesis, like, let's find people who can have a platform, who can bring money, who, you know, fits our culture, but how do you identify that JJ Watt is one of those people? And then how do you get in touch with Will Smith and JJ Watt? Like, how do you know?
So yeah, in those two stories, the two different things. One was through existing investors, you know, who kind of knew somebody, and so through those networks, right? I think, and then basically we kind of knew that JJ had been involved in a lot of different social group work too, and he just seemed like someone who would like what we're trying to build with Public, and ultimately what we stand for. And that was very evident from the first kind of call. And then with Will, it was through kind of different channels, but again, through relationships ultimately. And again, that was also really about finding that fit. And I guess there's no real silver bullet there, to be honest. I did remember hopping on a flight to LA. So, you know, that kind of helps, I guess. But yeah, it's there's no real silver bullet there. You kind of have to, because like you can know a lot about these people from reading about them online, but only so much, right? And so you really have to kind of start a conversation and kind of put out, like, show your cards and be like, hey, this is what we want to build. This is what we think is important, you know. And ultimately, again, we always came from the fact of like, hey, everybody should start investing early, right, to be able to compound more. They go along, right? If the average age in 5 years for people that got involved in the stock market is still like late 30s, then we would not have really succeeded in our mission. We want to get people starting earlier to basically build and let their investments compound earlier, right? And we think the effect that can have on the overall economy is pretty drastic on a sort of 20-30 year outlook. And then it really started from there, and then having those conversations.
Do you change your pitch, or do you have any tips if you're a founder lucky enough to get a meeting with a celebrity investor? You know, any tips for sort of approaching these folks? They must just get bombarded. Like, how do you?
Yeah, I think, I don't know. I mean, yeah, it's tough, but I think the one thing I will say, and I actually learned this, I remember this from Chris Saka. I met him kind of once back in Copenhagen, and he did this little presentation for the Copenhagen story community called Stories Over Spreadsheets. And his thing was always, I invest in stories, not spreadsheets. And I think that's very true with like those types of investors, right? It's like, you know, they obviously like, and I actually think he popularized that a lot. And I think maybe today you could actually, like, it would maybe be better with more people with more buttoned up spreadsheets, right? It's like, I do think failing to plan is planning to fail ultimately. And so, but I do think it's like, you know, these people like are generally, you need a mission that they can identify with, right? It's missionaries, not mercenaries, right? And I think obviously someone like, you know, well, like they're not in there to kind of flip a quick buck kind of thing. It's really to, and so you need your mission to really stand for something, and you need to really kind of think that through.
Actually had his partner of Dreamers on this show. So yeah, I didn't have Will on the show, but Cool. All right. Well, I think we're about done. Any tips, any last tips, general advice you'd like to share that we haven't covered, or any advice you would give your younger self if you were starting this process all over again?
Yeah, I don't know. I think, like I said, there's really no silver bullet to this thing. I think it's a lot of hard work, unfortunately. And so basically I would say, you have to go through a lot of things. I think your pitch always evolves a little bit, especially the first time you're kind of fundraising. And so, I always just got started early, it's like, hey, just to get feedback on the idea, frankly, right? And then if it's great, because then you go into a meeting with a win-win. Sure. It's intimidating. It can be intimidating fun, right? Especially if you're a first-time founder, right? And so it's like, if you go into it with just the goal of getting feedback, then it's going to be a win-win. You're either going to get feedback or you're going to get a check. And
sure.
If that's your mindset, then I feel like you are going to be more inclined to just kind of go for it.
Good stuff. All right. If people want to learn
Awesome.
more, it's simply public.com. And if they want to check out your portfolio, public.com, Jannick.
Yes.
Cool. Good stuff. Anything you want to promote or plug? Any job recs or new features, new
We're
products?
definitely hiring in a bunch of roles. Just go to public.com, look for careers, and obviously, sign up for the platform at public.com too, and start building your portfolio.
Are you hiring in New York or Denmark or is
Both.
it virtual? What's the
both?
Yeah.
All three.
All three.
So to say. Yeah, definitely.
Cool.
We're hiring in a bunch of things. So yeah.
Awesome, sir. I like it. Great mission. I love this sort of focus on mission and story. And I'll check it out. I used to be a stock analyst like way back when, and I've sort of like, the more I get into entrepreneurship, the more I kind of pull back from like stock trading, but it sounds like a cool platform very much. All right, sir. Thank you. We'll catch you after your next round.
Thanks, Nathan. Take
Bye.
care.